It's happened. We finally seen it here in the Twin Cities real estate market. Prices declined year over year. I'm Joe Schwartzbauer, your favorite Twin Cities realtor with the Great Act Properties team and Real Broker. If you ever have any questions, reach out to myself or the team. But let's get into the data because that's exactly why you're here. Prices have fallen. Let's take a look at it. All right, as always, we are looking at the 7-county metro, single-family homes, previously owned traditional sales. We are seeing, as of the April numbers coming out just a few days ago, $397,250 is the median sale price for a single-family home, and last April we were at $400,000. That is a decrease of 0.6%. Not a big decrease, but it is the very first time that we have seen a decrease here in the Twin Cities market in a very, very long time for the year-over-year numbers. Now, do we expect that to continue? Well, we will have to jump to at least 405 next month. And with all the buyers that I'm working with all the sellers that we're helping out right now, I think we're going to be above 405 next month. I do not expect to see another year-over-year decline. Part of the reason is we had a very long winter this year, so I believe that we got a late start to our spring market here in Minnesota. Here in Minnesota, numbers go up every summer, they drop every winter. If you're ever looking to time the market, the best time to buy a home is writing an offer in October or November or December, because that's when we see the lowest sale prices for properties that close December and January. You can see it every year here going back December, January. It's when we see the trough of the market. So what else is going on? Why are home prices going up? Well, one of the biggest reasons is inventory. We are very, very low on inventory. We're at 0.8 months worth of inventory. Now, what does that mean? Well, it means that if no more homes came on the market, all homes would be sold in 0.8 months. So what's that? 20 some days, basically. If nothing else came on the market, everything would be gone in 20 some days. That's pretty crazy. For context to that, a balanced market is considered 5 to 6 months worth of inventory. Well, in order to go back to find a time that we were ever at 5 to 6 months worth of inventory, oh, we got to go back more than 10 years even. Oh wait, no, we got 4.9 in 2014 for a quick second, but we really got to go back to 2012 basically, and all the disastrous stuff that took place around this time. So we've got to go back a long time before we could ever see a balanced market. And we've got to have a ton of inventory come to the market for us to see a balanced market. Let's just take a look at what those numbers might be. So let's just go back to December 2011 for the number of homes for sale. Let's see if we can find this. December of 2011, we were at 5249 for homes for sale, and we are currently at 1,666. We've got a long ways to go. That's 4,000 and some homes that we would need to somehow just magically come to the market, which they're not going to. Part of the big reason that we're not seeing a lot of homes come to the market and being sold is simply due to rate lock. Now, rate lock is basically a situation where a lot of sellers are in where they have a mortgage rate that's substantially lower than where they're at today. It doesn't make a lot of sense for them to sell their home. Yes, they can get a very high price for it and hit some of these peak pricing numbers, but they are also going to have to pay a high amount. And if they're going to have a mortgage, they're going to have a mortgage rate that is a lot higher than where they're at right now. Fun fact, 99% of all mortgage properties in the United States have a mortgage rate lower than where they're at today. And 2/3 of all of those mortgages, of all of the mortgages out there, have an interest rate of 4.5% or less. So we do have to see mortgage rates come down. The Fed did just come out today when this is being filmed with a 1/4 point rate hike. Now, the Fed rate hike and mortgage rates do not act in tandem. What we've seen in recent history anyway is when the Fed does these rate hikes, on the day that it happens, we tend to see mortgage rates come down for typically about a week and a half to 2 weeks. So we should see declining mortgage rates over the next couple weeks. The Mortgage Bankers Association is saying that by the end of 2023, we are likely to see interest rates in the low fives. Now, should you wait to buy a home? Well, buy a home when it makes sense for you. Reach out to one of the Grey Duck agents and let us know. We're happy to help out, but buy a home when it makes sense for you. If you want to wait for mortgage rates to come down, there's a lot of other folks out there that are waiting for the same thing to take place, and that is going to push market activity up. As rates come down, it's going to be very interesting to see what happens with these sale prices, because as rates come down and more buyers get into the market, more competition takes place, prices go up. I expect to see our prices go up for a fair amount of time here with this extended winter that we've had. So month supply, very, very low right now, 0.8 months. Days on market also took a significant drop. We were at 19 down to 11. We did peak out at 41 days, but man, February to March, we dropped from 41 to 19, and we're still trending down, and I expect us to be in single digits next month and probably remain there for a good 3 to 4 months likely. The percentage of original list price, this is one that has now creeped up over 100%. As you can see, over the past couple years, we hit 105.1 and 105% in the peak of those markets in the middle of the summer. Every year here in Minnesota, we see prices go up in the summer, down in the winter. Are you a buyer in this market right now? Have you experienced what's going on? I'm curious to know what you're experiencing out there right now. And if you're a seller, did your home sell in an absolute heartbeat? We are getting back to the times of almost just putting a sign in the yard is going to sell your home in multiple offers over list price just due to the very, very low inventory available. But as I was talking about, we did get over 100%. That's something, the first time that took place was in May of 2016, but had never really taken place before. We had always been in a bit more, never a complete buyer's market, but just not such a drastic seller's market that we're in right now. Supply is down, home prices are up. It's a tough time to be a buyer. If you're a buyer right now, you've got to be working with a phenomenal team that understands how to write a winning offer, because there's a lot more to writing a winning offer than just being the highest sale price or removing all of your contingencies. There's so many more things that we can negotiate on and craft an offer that makes sense for the sellers, but also makes sense for you as a buyer. If you're a seller out there, now's a good time to sell. It's been a good time to sell for, basically since 2016. You've seen some really good numbers for yourself with selling properties. We've had amazing results for our clients. So if you're interested, reach out. We're happy to help out. But that's what's going on here in the Twin Cities real estate market. Thanks for sticking around. If you have any questions, comments, drop them below. Questions, reach out to myself or anybody on the team. We're happy to serve. We'll see you next time.